Welcome back, everyone. We have our next presentation. It's Trillion Energy. It trades on the OTC under TCFFF and on the CSE with the symbol TCF. It is an oil and gas producing company with multiple assets throughout Turkey and Bulgaria. Please welcome its president, Art Halleran. Welcome back, Art. How are you doing today?
I'm doing very well. Thanks for having me back on again.
All right. We look forward to hearing your updates. The floor is yours.
Okay. So I'm Art Halleran, CEO of Trillion Energy, and we have a large gas project offshore Black Sea, and we are trading on the CSE, like mentioned, TCF. On the OTC, we have an issue when we re-domiciled to Canada. We got dropped off the board just due to an oversight. We tried to put it back on ourselves, but it was too complicated. So we hired a group that does this, and it should be back on within the next week or so. So for our highlights here, the picture you saw in the beginning was one of our offshore platforms. And so we have a 49% interest in a large discovered producing natural gas field in the Black Sea. We have 8 discovered fields. 4 of those fields have been on production, are still on production. We have 4 more fields that are proven reserves and will be put on production. And then we have a series of development locations, and there's a lot of gas there. We're in a very good economic area, a low royalty, about 12.5%. Our operating costs are about 1 MCF. And right now we're getting $15 US. And what I'm going to show today is we're going to be doing the first 7 reserve wells. And on top of that, we'll do another 10 development locations. And that will unlock about $169 million of NPV10. We're also in an area where we have a very large upsize is just to the north of us there. Turkey has made some very large discoveries, about 19 TCF. Like I mentioned, we are in a very high price gas environment because Turkey imports 90% of their gas. And on top of that, you know, Europe right now is being in a gas crunch. The Russian-Ukraine war, there's even more competition for the natural gas. This just shows you that our pricing here is quite high. Like I said, we get $15 US. We've been getting that for the last month or so. But even then, before that, over the last 10 years, we averaged about $7 an MCF. And now the NATO countries are actually looking for a more local, non-Russian source of gas. So where we're going to be developing is called SASB. Like I said, it's offshore Black Sea. We picked up a $608 million 49% of that for pennies on the dollar. It consists of 4 offshore platforms, subsea gathering systems like pipelines and so on, an onshore gas facility processing plant rated for 75 million cubic feet per day, but you can up to about 150 million cubic feet per day. We have drilled, like I said, we have discovered 8 pools. 4 of those pools have been on, and they have produced $355 million worth of gas. And at today's price, it'd be about 800 million. So again, because we have 4 fields that were drilled, tested, mapped, they are reserves. They're not exploration. They're not development. They're 100% probability of being there. And we have a third-party engineering report. And for that, and this This pricing here for the NPV10 is at the $8 to $9 range. And just for the proven, it's worth about $8 million NPV10, our percentage. And then we have, once you have those pools, you'll have development locations off them. And that'll bring in another $94 million NPV10. And so this is the first program that we're going to be, the first two programs we're going to be doing. Here is the planned 17-well development program. And I'll spend some time on this. Here is our pipeline. The green are our platforms and our producing fields that we're producing since 2007, 2011, are still producing. Onshore is our gas processing facility, and we're only about 12 kilometers offshore. The yellow are the pools that were drilled, tested, mapped, and so on, and they are the reserves. And so those are the GLJ reserve report. And then we have the red are what we call the development locations. As you can see, they're just part of pools, but because they haven't been drilled and it's a quite small separation, it's not 100%, so they have to be classified as development locations. So the first 7 wells or actions will be the 5 wells in the known non-produced pools, and 2 recompletions that have gas behind casing. So those are the reserves. And then we'll have a follow-up 10 development locations. And we'll be doing that in 2022 to 2024. We're actually going to be, our spud date is July 2022. Here's a projected cash flow we're going to get. Again, this is based on the $9. The reason why it's $9 is because we had the reserve report done at a third-party price forecast. We can't change that. So that's all where we have all our numbers calculated on. So for the first program, like I said, 5 wells to drill, and we complete 2 wells, and we're focusing on reserves. And we suspect when we do the calculations, we'll be at about a 3.7 million free cash flow December 2022. And then we'll be doing the program B, and the top of that will be up to about 7.6 US free cash flow after all costs, our percentage in our pocket. And then you can see there's a steep decline here, but we're going to be filling that in with expiration, which I'll show in the beginning. Later on. And this just gives you an idea. And the reason why I'm mentioning it is you'll see that this will allow us to continually drill, provide this CapEx to continue with the program. The field economics, basically, this is again at $9. So our actual OPEX costs are set. So they're 11 to 20 cents. The largest, of course, is royalty. So we net back at $9, $6. So you can do the math, what we net back at $15. Here's a quick summary of the value. US 169, that is from GLJ's evaluation report. So that's the 2P. We have $250 million valuation. All we're doing there is putting in our recovery factor and removing a couple of penalties. If we don't get the money, well, we are getting the money, so that's removed. So just those 2 programs that I showed you, A and B, has a value to us of 170 to 250 million NPV10. And then if you throw in the expiration, we're up to almost $500 million. Where are we getting the capital from? Right now, we are doing a non-brokered private placement, as you probably saw in the news release. And we were going to raise $10 million. The news is supposed to be out today. We are closing it and so the news will be out tomorrow. So I have to wait until that news release is out, but I can tell you the response has been very, very good. And so this non-brokered private placement will allow us to secure the rig, because I signed an MOU because there's very few rigs in the Black Sea. And we have the same rig that drilled the other wells in 2007, 2011. And so we have an MOU, we are defining the contract. And so we have to come up with $1 million as a reserve fee for Friday. And with this non-brokered private placement, we have done that. And also long consumables, but long lead items that we have to buy now or within the next week or so to hit our July 2022 spud date. And we've done, that'll be done. So we are guaranteed to have our summer spud date, like I've said. So we have the rig, we have the equipment coming out, and that's with the private placement. What we do need is we need 14 million US, 20 million Canadian. And we're getting that in the private placement, also potentially a small debt component. But what happens also is that we can get a $3 million, you just stretch out the accounts payable or a small bridge loan. So this funding equity raise we're doing right now basically is the only equity raise we need to do. Because of the cash flow of the wells, we will fund $57 million program with internal cash flow from the wells, because we'll be making, like you saw, pretty quick, 3 to 4 million US a month, and the rig is about 2.93 million US a month. On the block, this is how we get rid of that extra taper that I showed you there, is that we have expiration. The reason why it's called expiration is because even though it's the same reservoir, the same sandstone, and the same stratigraphic level, and we have seismic that shows with AVO modeling it's gas bearing and saturated, no well is actually drilled into these non-structural prospects. They're quite large, and so we'll throw in 1 or 2 of the best locations in our second B program. And if it proves up to be as good as the structural ones that we have, so these are the existing pools that were drilled before and that we're producing from. This is the stratigraphic expiration. It will double what we have already identified as the reserves, what we produced, and the development locations. So, and this is on the block, and it's a no-brainer. All these things are within our existing platforms and our gathering system. So the minute we drill, it takes 30 days to drill, 15 days to recomplete and turn on, and it goes right into our gathering system and facility and into the sales line, because we have no additional subsea completions or other equipment to put up, because we're drilling from the existing platforms. The larger, so the SASB block that we have now, what I just showed you, is going to be our cash engine. We're going to make a lot of money on it. We're getting $13, $15. We're going to be in a high gas environment. It's costing us not that much to bring it on production, because we have all the existing facilities, but we want to use all that cash so here is our known discoveries that we have. This is our SASB block. The red part is the land we used to have, and we have all the data. The blue lines are seismic. We've been in this area for 20 years, and we have large structures mapped. But at that time, even though they have reservoirs identified and they have source rocks and so on, the conversation was there was not enough gas generated in this basin to charge those large structures. Just recently, 2021, to the north of us now, about 100 clicks. The Turkish government has made 2 large discoveries for a total of 19 TCF of gas. They're drilling a 3rd large structure So this shows that the gas was there. It generated the gas, so there's enough gas to charge large structures. So we're going to use the cash flow that we're making on the SASB block to define exploration targets in the areas that we know and try to secure them. And those targets are TCF, whereas on our block, we're talking BCF. So those will be the real significant discoveries. I just want to, here's our directors of management. I just want to give a little background on myself. I have over 40 years experience in the petroleum industry. I have a PhD in petroleum geology. I was a co-founder of the original Canacol in Colombia, which is now valued at about $400–500 million, and is the largest gas producer there. I was also one of the original founders of Raleigh Energy in Egypt, and have done a lot of work in Africa with Griffiths Energy and United Hydrocarbons. So I have a lot of experience, and the one thing I always focus on is the asset. And in this case, you always try to focus on a conventional asset. This is a conventional gas field. So the asset here are easy, proven, existing conventional gas in a high price environment. I have the facilities that's underutilized, and I just got to put the gas in it. I'm in an area now that's going to get a really large gas crunch. And also one of my largest assets is at my office in Turkey. My manager and my people there have been there since 2000. So they have the track record and the relationship of the company. And so those are the assets I have there. And like I said, in a private placement, our shares are about 24 cents now. And our market cap is about 45 million, which is severely under what we should be. And we're just waiting to basically put the money to use and drill these wells and put them on. So that's it.
All right, are you ready for questions, Art?
Yeah, I sure am.
Okay. Robert Freeman wants to know, when will the listed intrinsic value of the company, $1 or so per share, be reflected by stock screeners around the world?
When will the intrinsic value?
Yes.
I'm not sure yes. when will people ask about the $1 a share?
Sure, yes.
Well, right now, if you look at the gas value, once we put on the gas on production, we're also going to be able to put the value of the facilities and gathering system back books, and that's another $50–60 million. And because of the first two programs are basically, they're not expiration, that's another about 240. So you're looking at 300 million right there. And our shares right now, we have 185 million shares out. Even after the non-brokered private placement, we'll still be in the high value there.
Okay. And Peter Hansen asks, have you received the first tranche of the financing, and when will you test those big exploration targets?
So we have the book. It's all in the lawyer's trust accounts, and they know how, the people who are listening know how this works. They have to have the share in one hand, the money in the other, but I can't really say anything until it's released, but it's very, very good. Yeah.
Okay. So, and Robert Ebenstein asks, so the price of the financing seems pretty low. Is this just an initial raise? And will you be raising money at a higher price eventually? And if so, how much more do you need to raise, and by when?
Yeah, so this is the initial raise. And like when people look at the value of it, they say 16.5 cents. Why not 20 cents or 22 cents? Well, when you work out the dilution, it's also the warrant. And so right now, marketing out there, they want to put out a full warrant. And so if you go at, say, 22 cents or 20 cents, a higher price placement, or they want a full warrant. But if you shave some of the money off and give a lower value for the share, like a lower price for the shares, we managed to get half a warrant, and that actually prevents tens of millions of share dilution, right? But again, to answer the question, yeah, this is the first tranche. This gives us freedom. So what this does, this allows us to secure the long lead items, also the rig. We don't need the rest of the money until June. And so we have a chance in between there to potentially have another raise at a higher price, but also we can go to debt lenders, because now we have, you'll see in a news release in the next day or so, we have a good chunk of money that makes the debt lenders feel comfortable that, because they like to have equity put in, because they'd like to know that the shareholders believe in the project. So that gives us an option. Also now with the price of gas, we're looking at pre-sold royalty. It doesn't have to be a large royalty, because all we really need is another 10 million Canadian.
So Johnny Otero says the financing for the SASB project seems pretty dilutive. Can you help us understand the details of this deal with Echelon for that said financing?
Yeah, okay, so it's the same question as before. So right now, equity raises aren't, they want a full warrant. And so as you can see, our shares, we're at about 24 cents. So usually you'll do a market at 20 cents or 20% or 25% below market, but then they want a full warrant, right? And so we had reserved this price, and we were negotiating. The reason why it took time, that we could put it out as a half warrant. And the half warrant, so an example, if you raise, say you raise $10 million at 16.5 cents, that's 60 million units, which include 30 million roughly warrants. So that's 90 million treasury shares out there. But if you do the same thing, say for 20 cents, you're now up to 100 million. So you've actually saved 10 million treasury shares with the warrant. And so that's kind of the playoff we have to do, right? So it is dilutive. We are going to try to focus on a higher price for the next one, and or do some debt financing. But ultimately, once we secure this first financing, you saw from my presentation that we'll generate enough money per month that we don't have to go back. If we put together a large expiration project, and that question, we can start putting, well, we have the data, but then you got to go out and apply for the block and so on. So that's a 2 or 3 month process. The expiration will be like a 3 to 4 year program that you submit, but we intend to try to accelerate that because we have the data. So something like that, you would have a good presentation on that, and that would add a lot of value to the shares. And then we'd probably try to do a debt or another raise at a lot higher price to actually do the off-block expiration.
Okay. Ken Kamikaze asks, how's the war in Ukraine affecting your business?
Well, first of all, it's affecting business because it's a very sad event. I mean, you can't deny that. But the actual mechanics of the business, it's not affecting it in any negative way. It's affecting it in a positive way because now there's a big focus on local non-Russian gas, and we're sitting on a very large untapped resource that we can then use to look for the very larger ones that will then sell to Turkey or Europe, right? So I don't want to say a war should never give you a positive, but in this case, it's just to do with the market there. So it has given a positive to the business.
Interesting. John Smith wants to know, what day are new shares going to be issued exactly? Because the initial closing was expected to occur on or around March 15th, but that didn't happen.
Well, yeah, okay. Oh, I see you saying this raise we just did now. So the shares will be out. So most of the shares are out with brokers. So they will then do the trust lawyer type thing. So I don't know where this individual got his shares, but if they are individuals, like from the president list, it goes. We have to put everything together. We have to make sure the money's in trust. So it's supposed to be on the 15th. They're now saying today or tomorrow. And that's just to make sure it's all legal. We have to do a news release, and then the money's changed, and then the treasury order is put in, which should be almost instantaneous the minute it's done. And then just a DRS, our certificate, is issued by the TA. So it should be just a matter of a few days, right? But I have a lawyer firm doing that because I'm a geologist, right?
Okay.
So.
That makes sense. Jeff Jans wants to know, at the end of 2022, what will the run rate for Trillion be?
For the end of 2022, if he means by how much money we're making per month, we should be up into, that'd be over, like, I think it was $4 or $3 million US per month. And then because each well takes about 30 days to drill and 15 days to complete and so on. So we're putting a well on roughly every month. So the first program will be finished pretty close to end of 2022. And I think we're up at about 3.4 million free cash flow per month. And then program B will then be another year, and then we'll be up to 7.4.
Okay. Kevin Stewart wants to know, do you have a price target for after the first well is spudded? And then what do you think the company should be worth by the end of the year? You might have just answered that. And do you give guidance? Yeah. Peter Russ also wants you to explain what spud date really means.
So share value, once we start drilling the wells and so on, people should know that the reserves are there. We had the money. We're executing the program. We're putting the gas on. We're getting a high price. It's up to the market to put a price on the shares. But personally, I think we should be $1 or above, right? Because the model's already been proved, and we have we're making money, and people will know, okay, we've done the first 3 or 4, we've got another 10. And then for Expiration, the stratigraphic ones, we got another 13. They know that the value is there. So it should be upwards into $1 there. Spud date means when the well is actually starting to drill. So we get the rig, it goes over the platform, it's all set up, and then they have the bit on the drill pipe, and then the bit starts drilling, and that's called a spud date.
Thank you for that. Peter Hansen wants to know, are you already in Turkey and Romania?
Oh, no, I'm not. No. Okay. The reason for that is I have to meet with TPAO, our partner, and then I also have to go to Romania to sit down with the people with the rigs. And I'm also going to make a trip to Bulgaria because we have a property in Bulgaria that before was a bit sidelined, but now with what's happening and they're looking for gas for NATO, we have a unconventional, but it's a well-known unconventional coal bed methane, and we have a report that says we have about a TCF. So I have to organize all those meetings because with COVID and so on, it's still not that easy to travel. So I'm supposed to go next week, but I'm waiting for my partners to say, okay, we have time to sit down, because they're actually quite busy right now in the deep water of the Black Sea with their really big discoveries.
Well, here's a follow-up question from Ernest Schonbuckler. Will you also present your company physically in Europe at some point?
Yep, we will.
That's the plan, I'm sure.
Yeah.
Sue Ann wants to know, is the new private placement funding in CAD or USD?
It's Canadian dollars, yeah.
It's in Canadian. Okay.
Yeah.
James wants to know, sorry, go on.
I was going to say the Northern Peso.
Or the Northern Peso. James Heap wants to know if you have any plans for listing on other exchanges.
So what happens, we always get suggestions. We should list on this exchange and list on this exchange. And at this time, we have exchanges in mind, but they have to make business sense. So right now, the answer is no, because right now we have enough paperwork, enough costs and so on. And we want to focus on getting these wells drilled on production, advance some of our exploration projects. But that being said, if we need to attract, say, some large debt lenders that are not, we're not talking like 50 million now, we're talking like 100 or 150 million. Potentially, we will have to go on a different board, like maybe in London or some other more boards that the large lenders like to use.
Wonderful, Art. Well, we are finished with our time, I believe, yes. And so I do want to let a few of our audience members know that your ticker symbol on the OTCQB is TCFFF, and on the CSE,
it should be
TCF. So TCFFF and TCF. And yes, this will be on YouTube. It's youtube.com/emerging growth conference. And that will be on YouTube very soon. So stay tuned for this full presentation separated so you can share this with your viewers whenever you need. Art, thank you so much for giving us these important updates about your company. And we look forward to seeing you again in the near future.
Okay, yeah, thanks again. Have a good day.
All right, thank you too. Okay, everyone, stay with us. We're going to transition to the next company. We'll be right back.